So first of all, I'm going to start last week Friday the trade I took, how I take those trade. So now this is what I always look at. You can see at the indicator. What I do is that I wait for price to break above my this blue level. Let the price broke, but it must happen at a support. Price must touch my support level or my resistance level. Let the candle cross above it. I have to wait for price candle to close above this blue line. If there's no close above this blue line, there's no entry. And the more confirmation is when price creates an hem pattern before breaking, it gives more confirmation that this market is really going to go to my direction. So if you look at here, this was a session. I told you guys I didn't take this trade. So price created an M pattern, which I told you about. This is like a double top I told you about. Price touches level, retrace, came back to touch this level, making this a double top. Now, M pattern, this is how M pattern is created. At this double top, M pattern was created here. At this double top, M pattern was created here. So what I normally wait, I wait for price to close, the candlestick to close below this level here. This blue line, look at this blue line here, not the red one. The red one, the reason why I put this red one helped me to form the M pattern, help me to see when an M pattern or a W pattern is being created. So with this red line, it helps me. So I'm still going to show you how to set it up on your chart. So when price close below here, you enter at the closed candle, the last closed candle that closed below that blue line. Then if you're buying, you wait for the first close, the candle that close above the blue line, then you enter. It doesn't matter. You don't need, as long as this market price was at your support, as long as it was at your support and it gives this signal, you just buy. That is just what it is. Execute, target your risk, maybe target the nearest support, or if you still want to reach 1 to 2, then you reach 1 to 2. So this was how I took this trade, and I missed this one because it was the Asian session. I don't take trades around those Asian sections. So the same thing happened here. Price came here, I was still waiting for a break. So for some traders now, this is where your emotion come into place. Now this is a resistance, right? Now if this confirmation wasn't there, this crossover wasn't there, some traders have already taken a sell at this one because price get to this one. Some people have already started selling. Some person have already started selling. Now me, I'm still waiting because I've not seen a confirmation for a drop to a sell. Now price came to this point and sell a little bit, inducing traders into an entry for a sell. Then later price came back again, swept them off before start dropping. So this dropping now is when I saw the close candle. You can see it's even better when this M pattern is created and a strong momentum candle close below that blue line, or a morning star, evening star, or a bullish around me, bearish around me. These two candlesticks are the major candlestick I normally use: bearish or bullish engulfing, or morning star with evening star. Those are the candles I normally take very close. I always pay attention to. So the same thing happened here, but this was Asian section. I couldn't take this trade, but if you look, there was a close here. When price gets to this support, there was a close here before buying. So if I had taken this trade, maybe it would have been a very nice profit for me. So I waited. Now look at what happened here. Price created an M pattern, but it wasn't at the support level, at your point of interest. So you don't have to take this trade. This trade are only for experienced traders like me. I might take this trade because I've seen this M pattern. This W pattern is a confirmation that price have found resistance around this level, which is not at my point of view, but the price have found resistance here and gave a confirmation, which is a break above. So I would have entered a buy here, put my SL here, price would have just chase and still continue. I would have hit TP on this trade. But for you as an intermediate, I will not advise you to do that. So now price gets to this resistance again. What you wait for again, you wait for the confirmation. Now when price gets here, some persons will think this is a buy. Some people will buy saying this bullish and curving, but me, I don't buy. I wait for a confirmation. So if I wanted to buy this trade, if I wanted to buy because price broke above here, if I really wanted to buy, what I will do, I wait for price to get up here, come back again, give me a W pattern, then close above my blue moving average, then I'm going to buy. But as long as there's no confirmation, my moving average has not given me a confirmation, I'm not buying. So I waited. In the process of waiting, I see price waited the first leg here, the second leg, which is called the M pattern, and I waited for the candlestick to close below. When this candlestick closed below, I enter for the sell. Here, and I was targeting this other level. Now, let me show you a clearer picture now. This is the reason why I lose this trade. When I entered the sell at this point, price sold to this point. When I came back to the chart, price was around this level. So I dragged my SL. To this level where I took my entry from. So price came and poof, moved me out of the trade. Price moving out of the trade and went to my direction. So I felt bad. I told you before, I said I felt bad, but never mind. It's just how the price, just how market do. So this is the trade I took today, guys. I wait for the confirmation. I wait for this red candle to break above and the candlestick to close above it at my support level. So when price came to my support level, price created this W pattern and it closed above this blue line. Had it closed above this blue line, that's where I enter my trade, put my SL here, and my TP was this level here, which I told you. So after 2 hours when I came, market was around this point. So as market was around this point, I just draw my SL to my entry level. So coming back again to the chart after 1 hour, price have already broke above this point. So what I did was to drag myself to break even around this level, which price later come back and take me out. So you can see the same confirmation, the same thing that happened here is the same thing that happened here. Which if this was a London session, I would have still taken a buy here. So the reason why I advise every trader to take trade on the London session, GBP, JPY. So as long as GBP is concerned, there will be volatility London session. So the reason why I advise every trader to always take trade at the section at like London session or New York sessions, because those are the section where it's been volatile. Imagine taking this trade at Asian section, the market will just push up, start consolidating. It's going to take time. So you might even reject, hit your SL and still be consolidating. So there's no clear volatility in the market. That's more reason why I prefer London session. Now, London session, as you take your trade, as long as it's London session, there are higher possibility that there will be volatility in the market that is going to push that trade to your direction or against your direction, but there will be volatility. That's the more reason why I advise you to target section, trade at the opening session, either London session or New York session. So you're going to choose the session that works best for you. So now let me show you, and now I'm going to be taking you to the setting on how to set this indicator on your chart. Now you're going to go to MT5, then look at this thing here, this thing that looks like an N with a cross. So you're going to click it. When you click it, you're going to go to this plus here. You can see this F plus. You're going to click it. So when you click it now, let me just show you now. When you click it now, you go to moving average. You can see moving average is just here. Yeah, after like you just count this indicator from 1, 2, 3, 4, and 5. The fifth indicator is moving average. So you click on it. When you click on it, then you're gonna set it. So this is how the interface is going to be like. So let me take you to the one I've already set. I'm just showing you how to enter the moving average. So the first moving average is you're going to set is going to be the period 9. Sometimes I use period 9, sometimes I use period 10. So you just choose any one. So you might still use the same setting I use here, which is period 9. So the shift is going to be 0. The method is going to be simple moving average, which is applied to closed candle. So this is simple. So I want you to save this video, make sure you rewatch it. This is period 9, shift 0. The simple, the method is simple moving average, which is 9. Simple moving average is 9. So apply to close. Don't change this to open. Let it be at close. The method should be simple. So this is just how. So yeah, you're going to come to this pen here, and what you're going to be doing there is that you're going to be setting up the levels to be none. Put the levels as none. This to like the thickness should just be none. So you don't have to be complicating on your chart. So the time frame I use this is actually, you can just put only 15 minutes time frame. So you will come to this pen, click on the pen. When you click on the pen, you only gonna all this box will be clicked. So what you do, you unclick all this box and only click 15-minute time frame, or you might click 15 and 30 minutes time frame. So you might also follow the same setting I do here. So that you click 15 minutes or 30 minutes, or you click the two of them. So after that, you're going to click on save. You can see save here. You click on save. Now the second one here, you're still going to go do the same thing I did. Go to that F plus and choose moving average. And the period is going to be 2. The shift is going to be 0. The method is going to be exponential method. It's going to be exponential moving average. It's not simple. The 10 or the 9 is simple, but the 2 is exponential moving average. So you're going to use exponential moving average. You're going to choose close. So now the time frame is going to be only 15 minutes time frame. It will only appear at 15 minutes time frame. Don't choose any other time frame. Only 15 minutes time frame. You're not to choose any other time frame. So you just go here and you click only 15 minutes time frame. But for the simple moving average, the 10 or the 9 simple moving average, you can click 15 and 30. But on this other one, because this other one is not really necessary on the chart, I use it for M pattern and W pattern formation and the head and shoulder width in the inverse head and shoulder. That's the more reason why I use that, so that it will show me. I don't have to switch to the line chart to see it. So that's what this other one helps me to do. So it's not really compulsory for you to use this one now. You can actually, with that one that I showed you, the 9 simple moving average is enough for you to use as a confirmation on the 15 minutes time frame. But if you need more conference, more visual conference to see the M and W pattern when it's being created, so I would advise you to use this. So when you finish setting this, you click on save here. So everything here will be shown. You can see it will show on your chart like this. So after all your analysis, you wait for price at the support, you wait for price at the resistance, and if price breaks here, if price breaks and retests, don't just go into a position. If price break and retest, even though this market retests and start buying, don't be afraid. Don't feel like as if you've missed this trade. Wait for it at a resistance, or you wait for it to come back to that support and give you an end pattern with this confirmation before going into the trade. Don't feel that as long as this price has not given you this signal, as long as price is not giving you this signal, don't go into any trade. And make sure this signal is giving you at the London session, depending on the pair you trade. For gold might give you this signal. You might be waiting for it at New York session, or maybe London session to New York session. So you just have to time the section when there's volatility. So for me, by 7 o'clock, there's always volatility in JPY. By 7 o'clock, there's volatility in the market. So that's more reason why I normally take my trade from 6 o'clock in the morning if I see an opportunity. But if price doesn't give me opportunity from 6 to 7, I'm still going to wait. If you give me by 8 or 9, I'm still going to go in, because I believe even though you give me that confirmation by 9 or 10, I'm going to hold that position till New York session. So New York session, there will be volatility. So volatility is going to push the price to my direction. So that's the more reason why if I don't take trade the London session at that early stage of London session, which is 7 o'clock, 6 to 7 o'clock, I can still take trade by 9 or 10 when I see my confirmation. So that's more reason why they say patience is key. You have to wait for your setup. You have to wait for your confirmation. Don't chase price. Wait for price to come to you, give you that nice confirmation, and you enter. This is going to help you to build an edge in the market. It's going to help you to create a system. So with this, you can now work on your risk management, your plan on how to trade, how to enter and exit the trade, the rules you're going to be following. So with this, you can build a very nice rule that you'll be following. So I want you to use this. The reason why I'm doing this video for you, because I don't want you to be losing all this account that you're losing. I want you to watch this video. If you watch this video the way I said this video, after that, back test it on your chart. Back test it after setting this, back test it